Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Adam Segal, founder and CEO of Cove, a platform that consolidates tenant experience and operations into one system for residential and commercial properties. He joins me to discuss how office spaces are becoming places that employees want to come into and converting empty offices to residential buildings. Adam, it's great to have you with us. Welcome to Trade Talks.
Awesome. Thanks so much, Jill, for having me.
You got it. What are some of the challenges and opportunities of hybrid work for commercial real estate?
Yeah, no, I think it's a great question, especially what's been going on in the commercial office markets. We've seen increased vacancy in a lot of markets, especially in the Northeast, San Francisco, Chicago. I think the component of hybrid is still evolving and how companies actually implement it. This is creating a ton of opportunity in the longer term for office as it gets defined, as people are able to better differentiate their buildings to attract the more modern companies. So I think you're going to continue to see this evolution as ownership continues to attract new companies and how they're working.
What are some ways real estate owners are making their office spaces places that employees want to come into?
Yeah, I think this goes back to their comment around residential. It's really turning into a more consumer-centric experience. So layering heavy, more technology, more consumer-centric ways to engage with the building, more offerings that are retail-oriented, and not just thinking about it as a place to go where you have one desk and you sit there all day and then you leave 9 to 5, but a lot more dynamic amenities, food, activities, so that kind of that hybrid component of why you go it's very differentiated from where you're coming.
Why is converting empty office space to residential buildings an important part of the future of real estate? As I understand it, it can be costly to convert from commercial to real estate. So where do you see that to residential? Where do you see that opportunity?
Yeah, no, it is more costly. If you think about an average apartment building, it has different plumbing, different units, which lays out very differently than a commercial office building, and also the footprints. Commercial office buildings have very large footprints, which creates limited window line if you turn it into residential. So I think where the opportunities come is there's just a lot of supply in certain markets right now of commercial office. You convert some of that into residential, not all of it. What's the exact amount? It's contingent upon the market. And then it actually enhances the other buildings, the other commercial office buildings, and creates more of a mixed use environment. As you bring in residential, office is typically known as a 9 to 5 solution. Residential is an all day 24/7, right? So then as you bring in a 24/7 solution like residential, retailers come in and then you have a true mixed use environment, which creates a better experience for everyone.
And how does this impact the surrounding neighborhoods?
The surrounding neighborhoods get the benefit and boost from all of that activity, right? So if you go down to a downtown market, right, it's 9 to 5. At 6 o'clock, it pretty much empties out. There's not as many restaurants open. There's nothing open on the weekends. But if you create a true mixed use environment, different places like a Union Market in DC, for example, there's office, there's residential, there's a big retail component. That creates activity 24/7, 7 days a week. Depends where, which component of that asset class you're using, but it's being utilized in so many different ways.
What should real estate investors be thinking about right now? I mean, real estate's a very broad sector. Where should they be looking within that?
Yeah, I think right now with interest rates, there's a little bit of wait and see component to it, as you can imagine, especially with new development. More generally, I think real estate, the benefit of real estate is it has long-term value. No matter what, whether it gets converted, whether it stays in the same asset class, it has long-term value. So it just really depends on what type of investor you're talking to. Do they need more of an immediate return, or how long is their hold period? I think generally, multifamily and residential, that has stay power no matter what. But these other asset classes where some of the pricing may be coming down, like commercial office, that creates new opportunity, especially as work's being redefined within the hybrid environment.
Right. And Adam, to wrap up here, when you think about the real estate sector more holistically, what's your outlook, let's say, for the next 12 months?
Next 12 months, still think we're in a wait and see based off of interest rates. Until those start to come down a little bit more, there's clear guidance. People are still holding off on developments, renovations. It's just costly to do those types of components right now.
All right, Adam, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great, thank you.